Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 retail stocks that all come in as strong buys and some analysts think could grow over 30% in this next year. We're going to take a look at what each of these companies do and what has analysts feeling so bullish. Just before we get into that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes and as a jumping off point for your own further research and due diligence. With that being said, let's get right into these retail stocks, starting off with a company that you have probably heard of before. That is Nike. Trading under the ticker NKE, they're currently priced at $138.34 per share. They also pay a dividend that is currently at a yield of 0.8%. Nike, of course, is best known for their footwear along with other apparel, and their iconic swoosh logo is recognized worldwide. They create innovative must-have products, building deep personal connections with consumers and delivering an integrated marketplace with compelling retail experiences. Nike reported their third quarter of fiscal 2021 earnings report on March 18th. Nike reported $10.4 billion in total revenue for its Q3. This was up a mere 3% year over year, which was a minor gain for such a large company. Nike reported a 10% decline in North American revenue, mainly due to supply chain disruptions, a shortage of shipping containers in the global markets, and heavy congestion at the U.S. West Coast ports have harmed inventory flow and wholesale shipments. The North American losses were balanced by an impressive 51% revenue gain in the Chinese market. Nike's overall earnings rose in the recent quarter, with their earnings per share coming in at 90 cents, which was up 69% year over year. One analyst covering the Nike stock is 5-star analyst Matthew Boss from JP Morgan. And he likes Nike, both in its market position and its forward prospects. He writes that we see Nike's brand momentum across geographies as sustainable and providing insulation to macro volatility and supporting sustainable multi-year high single-digit top-line growth. We view this, combined with continued gross margin expansion, driving sustainable multi-year mid-teens earning per share growth. There are currently 18 analysts altogether that have ratings on Nike stock, and it does come in as a strong buy. That is based on 15 buy ratings, 2 holds, and 1 sell. The average price target is $165, which would be a 19% growth potential over this next year. Taking a look at our detailed list of analyst forecasts, the most recent rating comes from RBC Capital with that $165 price target. The highest comes from Bernstein with a $190 price target, which would be nearly a 37% upside potential. The second company on our list today is Ollie's Bargain Outlet Holdings. Trading under the ticker OLLI, they're currently priced at $87.65 per share. Now, the pandemic slammed a lot of brick and mortar retail stores, but some sectors were uniquely positioned for the challenge, and Ollie's was one of them. Ollie's is one of America's largest retailers of closeout merchandise and excess inventory, and the chain has over 490 stores across the country. Their buyers scour the world looking for closeouts, overstocks, package changes, manufacturer refurbished goods, and irregulars. Much of the merchandise comes direct from the finest manufacturers in the country and abroad. For example, if a manufacturer makes too much of an item or changes their packaging, Ollie's will buy the overstock or old packaged items. They also work very closely with financial institutions. When companies are liquidated, the banks will often sell remaining inventories and turn them into cash. Ollie's will buy the goods back and pass the savings on to you, the customer. Ollie's posted their fourth quarter and fiscal 2020 results on March 18th as well. The company showed year-over-year gains in each quarter of 2020. For Q4, the most recent reported, the top line came in at $515.8 million, which was up 22% year-over-year. Their earnings per share at 98 cents was up from 70 cents the year before, which was a gain of 27%. Management reported that the full year 2020 results, despite the pandemic, were the best in the company's history. Their comparable store sales grew over 15% in 2020 as a whole, and the chain opened 46 new stores during the year. They also have a strong balance sheet with over $447 million in cash available and negligible debt. Covering the Ollie's stock for Jefferies is five-star analyst Randall Connick, and he sees Ollie's as well-positioned in a tough niche, writing, "We believe Ollie has ample runway for store growth ahead in both new and existing markets. Strong and growing brand awareness, coupled with a healthy buying environment following significant retail dislocation, positions Ollie well to continue gaining share." Looking at the balance sheet, he said that their cash is near $450 million with little to no debt. This puts Ollie in an enviable position, and we like that the company is putting that strong cash position and strong cash flow to work with an increase to their share repurchase program. Ollie's stock has 8 current analyst ratings in total. Coming in as a strong buy based on 6 buy ratings and 2 holds, the average price target of $106 would be a 21% upside potential. The most recent price target came from Bradley Thomas from KeyBank just 3 days ago with a 19% upside. The highest coming from Jefferies with $125 price target that would be a 42% growth potential. And the third company on today's list is another one that needs little to no introduction, and that is Lululemon. Trading under the ticker LULU, they're currently at $330 per share. Lululemon, of course, is known for their athletic wear, specifically targeting the women's demographic, but recently they have been expanding and adapting their product line to appeal more to men as well. They recently launched a home workout product as well with the Mirror. This smart mirror home gym transforms less than 2 feet of wall space into a cardio class, yoga studio, boxing ring, and so much more. They recently shared their Q4 2020 earnings. Their total revenue came in at $1.7 billion, which was revenue growth of 24%. They also had adjusted earnings per share of $2.58, which was up 13%. Their full year revenue came in at $4.4 billion, which was up 11%. The company finished 2020 with 521 stores, a net gain of 30. Earlier this week, they launched their Lululemon Like New. The pilot trade-in and resale program is part of Lululemon's impact agenda and Be Planet environmental commitments to accelerate progress towards a circular ecosystem by 2025. Starting in May, Lululemon guests in Texas and California can trade in gently used Lululemon clothing in one of the 80-plus participating stores or by mail in exchange for a Lululemon e-gift card. One analyst, Roxanne Meyer, is a fan of the new program. The analyst is enthusiastic about the model, calling it a brilliant strategy for driving new customer and sales growth. The company is among the first to incorporate a re-commerce strategy into its business model and will thus serve as a role model for other retailers who will likely watch closely. Another analyst covering the Lululemon stock is Jim Duffy, and he argues that Lululemon's better-than-consensus guidance for revenue and gross margin shows convincing evidence of fundamental strength, but that its lower-than-consensus guidance for earnings per share is entirely reflective of dilution from Mirror. In that context, he thinks the strategic justification is clear for spending to invest in Mirror, as he remains constructive on Mirror's momentum and opportunities. He says that Lululemon remains uniquely positioned at the intersection of powerful secular trends. The Lululemon stock has 15 current analyst ratings, coming in as a strong buy with an average price target of $397, which would be a 20% potential upside. The most recent rating coming just 4 days ago with a $395 price target, and the highest coming 1 month ago from Piper Sandler with a $465 price target, which would be a 40% growth potential. So there are 3 retail stocks all coming in as strong buys with some pretty solid growth potential ahead. I always love hearing from you guys, so make sure to leave your thoughts on these 3 companies in the comments down below and which other stocks are catching your eye this week. If you enjoyed today's video, make sure you hit that thumbs up button, and don't forget to tune in Monday morning for my pre-market morning update, where we're getting you up to speed with everything you need to know before the opening bell. Thank you guys so much for watching. I hope you have a wonderful weekend, and we will see you back here next time.